Hi, welcome to the Market Alert for Tuesday, the 29th of March 2017. So yesterday the US market was open. It was a bit scrappy, 6 trades with a net of 55 points. I'm not going to go through each individual trade because I want to talk more about the background of the actual market and what we can expect going forward. We have looked at this a bit, but I want to spend a bit of time looking at this and also showing you how you can see what's going on in the bigger scale of things by using the implied volatility and how we use this in August of last year to see and forecast the flash crash that we had. So in the daily chart you can see the market is stuck in this sideways range. Yesterday they managed to pump the market back up to the upside, as they have been doing for the last about 7 weeks now. 2,000 points back up to the 17,500, 600 area. You can see there the market sideways. So what does this mean in the bigger picture of things? Well, we've seen the market move back, as I say. If we go to the implied volatility, you can see this is actually dropped off, and as I've said before, when we get down towards these lows, we can expect something big to happen in the underlying market. That is, see the underlying market move to the downside. And if I just move back to August, I'll show you what happened last time. And again, this was all predicted. If you go back and have a look at the market alerts, made you aware of the coming correction in this market at the time. So we go back to June, July, and you can see the implied volatility is the same level now as it was then. You see how the market came down June, July, with a bit of an up move there. Then we came back down with the implied volatility. All was quiet. We had this sideways range as the market had moved higher. Just move back a bit more there. We can see the market going up through May. Came fairly choppy, but nonetheless the market put in an all-time high, which is just there in May, and then started to move sideways. And this is where it gets interesting in June. You can see the market going back up. I'm just going to reset these for a second. Might give a clearer picture then. So we see the market then attempting to move back up in late June. And if we look at late June there, you can see July, the implied volatility starts to drop down as the market trades sideways. So the calmness comes into the market. The market's making no progress to the upside. And then the next minute, out of nowhere, we get the flash crash, which has caused the major problem for this market. Well, not a problem for the market. It actually tried to go down, but then the plunge protection team came in and brought the market back. And if you've not seen the video for the 25th of August, I'll also have a look at that. I'll give you the reasons behind this move. So here we're seeing the market move back, and this is where it gets really interesting, because if you have a look, I'll just compress the price bars. We've got the all-time high over here back in May, and each time the market's come back up, it's failed to take out the high to the left of it. So then we see the market move lower, and there you can see failed to take the high, 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 and now we're in a situation where the market is currently approaching the high to the left. So a crucial area for this market, 17,746. So moving forward and looking at the implied volatility, we are ready, or the market's getting ready for a major correction again to the downside. I'd be very surprised if it doesn't, because after uncovering this back in 1992-93, it's never ceased to fail when we have this type of setup. And you can see that the only thing we can't predict is the actual day that it's going to go, but it does give you an indication that somewhere in the background we can expect to see the market move back to the downside because of this particular type of setup. Also notice the volume. It is a sudden drop off. It's like falling off a cliff here. You can see the average line moving down. The volume is below the average lines, apart from the FOMC meeting that we saw back a few weeks ago, and there is absolutely nothing driving this market to the upside. So just to summarize, we've got the lows in the implied volatility at the moment, back down to those lows that we saw back in July. We've also got the market failing to make the high to the left, which the market's done ever since we had the flash crash back in August. Ever since then, the market's failed to move back above its previous high, which is indicative of a bear market. Things will change if the market goes above 17,746, which begs the question, what would have to happen in order for this to do that? Well, the only thing that could happen really is that Mrs. Yellen goes for more printing, but they're talking about increasing interest rates. So who knows what madness will follow in order to trigger this, but there's going to be something that will trigger this to move it back to the downside. That's a certain fact. And then the third point, again, just to finish off the summary, the volume is incredibly low. So there are three things there glaring that say that this market is running out of steam to the upside because of the lowest implied volatility, failing to close above the highs to the left, and the drop off in volume there. News wise today, let's just have a quick look, and you'll find that Yellen is actually speaking today at 5:20 during the quieter period. I don't know where she's speaking or what it is, or where she is. It could be a university lecture, it could be, I don't know, but the fact is she's wheeled out today to speak at 5:20, so be aware of that. And let's see what the market's reaction is to that when she is. Consumer confidence at 3 p.m. This is to show a small increase to 93.9, but let's wait and see what the actual figure is. Right, well, that's it this morning. We've already seen the implied volatility. That's still down in the lows. And like I say, there's the three things that you want to have a look out for and keep an eye on as we go forward from this point. Right, that's it. I will see you in tomorrow's. Have a great day. As ever, thank you for your support and also for watching.